Cathie Woods, the CEO of ARK Investment Management, has said she believes China is on the brink of an economic collapse. Wood has been vocal about her belief that China is in a bubble about to burst. She said that the country's debt levels are unsustainable and its currency artificially devalued. She's also warned that a Chinese economic collapse would have global implications. While some experts have dismissed Wood's claims as alarmist, her opinion carries weight given her experience as a successful investor. Cathie Woods is an American businesswoman who is the founder, CEO, and CIO of ARK Invest, a thematic investment firm. Wood has been a longtime investor in disruptive companies and technologies. Wood was born in 1955. She earned a degree in economics from the University of Southern California in 1981. After working in various financial firms, she co-founded ARK Invest in 2014. In recent months, China's economy has shown signs of instability. It's caused many to wonder what will happen if the country experiences an economic collapse. Wood is not the only one who's warned about a possible Chinese economic collapse. Jim Chanos, the founder of Kynikos Associates, has said that he believes the country is in the midst of an economic bubble. Chanos has said that China's debt levels are unsustainable and that its currency is significantly undervalued. He's also warned that a Chinese collapse could have significant global repercussions, like Wood. The Chinese economy is fragile and has been propped up by an unsustainable debt bubble for years. When this bubble finally bursts, it will trigger a domino effect that will plunge the entire country into an economic depression. Let's discuss Cathie Woods' assessment of China's economic collapse. Wood believes that China is in the midst of an economic collapse, and she's been bearish on the country for some time. She cites several factors, including the country's high levels of debt, its over-leveraged financial system, and the recent stock market rout as evidence for this. However, Wood's assessment of China's economic situation is not all doom and gloom. She believes the country has several strengths, including its large population, growing middle class, and vast natural resource reserves. She considers these strengths will enable China to weather the current crisis and emerge as a more robust economy in the long term. Wood's assessment of China's economic situation has generated much debate. Some analysts believe that she overestimates the extent of the country's problem, while others think that she underestimates the strength of China's economy. Regardless of where one stands on the issue, it's clear that China's economic situation is complex and warrants close attention. The most significant question that comes to everyone's minds is this: is China's economic collapse inevitable? When it comes to China's economy, there are a lot of factors to consider. For one, the country has a massive population that's constantly growing. Additionally, its economy is highly centralized and state-run, which can be both good and bad. And of course, there's an ongoing trade war with the United States. All of these factors make it difficult to predict the future of China's economy. However, Cathie Woods believes the country is headed for an inevitable collapse. There are several reasons why Woods thinks China's economy is doomed. For one, she believes the country's debt levels are unsustainable. China's government has been borrowing money at an unprecedented rate to fund its many infrastructure projects. It's led to a situation where the country's debt is now equal to its GDP. Additionally, Wood points to the country's slowing growth rate as another sign of an economic collapse. China's economy has been increasing for many years, but that growth is slowing. And finally, Wood believes that the ongoing trade war with the United States will further damage China's economy. While it's difficult to assess China's economy given the many factors at play, it seems that Wood has a point about the country's unsustainable debt levels and slowing growth rate. If these trends continue, it's possible that China's economy could collapse. However, it is also worth noting that China has a lot of resilience and has weathered many challenges in the past. So while an economic collapse is possible, it's certainly not inevitable. Let's discuss the warning signs of China's economic collapse. China's economy has been slowing down over the past few years. It's expected to grow by just 4.6% in 2023, which is the slowest rate since 1990. Many experts believe that China's economy will eventually collapse, and there are some warning signs that such an event may be imminent. Along with slowing economic growth, China has a lot of debt. The country has around $7 trillion in debt, which is equivalent to 40% of GDP, but much is owned internally to Chinese banks and companies. However, the Chinese government owns a significant amount of money to foreign governments and investors through loans and bonds. There are many warning signs of an impending economic collapse, and China is no exception. As the world's second largest economy, a failure in China would have catastrophic consequences for the global economy. Wood and others have been warning about China's economic slowdown for years. I've been warning that a credit crisis in China is inevitable because it's been building up and building up, Wood said on CNBC's Futures Now. I think it's clear now that the Chinese government is intervening more than they have in the past. Not only do I believe a credit crisis is coming, but we are closer to the edge than people realize. If the US Federal Reserve were to raise interest rates too quickly, Wood warned, it could spark a bigger problem in China by making its debt burden even harder to handle. She's become one of the most influential voices analyzing China's economy. We're at an inflection point where something bad could happen, Wood said. China is the most developed country, and its economic collapse has many implications for the global economy. Let's elaborate on its efforts on global economies. Wood added that aside from the potential implications of a China economic collapse on the global economy, there are several other potential impacts that businesses and consumers worldwide could feel. For example, a possible decrease in demand for Chinese goods and services could lead to layoffs and reduced hours for workers in China that rely on exports for their income. It could, in turn, lead to social unrest and even more instability in the region. Additionally, the knock-on effects of a Chinese economic collapse could lead to higher prices for goods and services worldwide, as China is a significant player in the global supply chain. It could cause widespread inflation and impact purchasing power of consumers in countries that import from China. Finally, a Chinese economic collapse could trigger a domino effect, leading to failure of other countries that are highly dependent on China for their economic growth. It could lead to a global recession or even a depression, with widespread consequences for businesses and consumers worldwide. The government needs to act now before it's too late. Wood believes the Chinese government should avoid an economic collapse by investing in renewable energy, electric vehicles, and 5G technology. She also believes the Chinese government should create a more efficient healthcare system and improve its environmental standards. Wood is not the only one who thinks the Chinese government should focus on investing in renewable energy and electric vehicles. Many experts believe China needs to shift its focus from coal and other fossil fuels to avoid an economic collapse. China is the world's largest emitter of greenhouse gases, and moving to renewable energy would help to reduce its carbon footprint. In addition, electric vehicles are becoming increasingly popular, and China has an opportunity to lead the world in this technology area. 5G technology is also crucial for China's future, providing the country with a significant competitive advantage. Other countries, such as the United States, are investing in 5G, but China is expected to be the first to deploy it on a large scale. While Wood's advice is sound, it's essential to remember that China is a large and complex country. There's no one-size-fits-all solution to its economic problems, and the government must tailor its policies to the country's specific needs. Thanks for watching. I hope you enjoyed the video. Like, share, comment, and subscribe for more knowledgeable content.